All right, so let's get it popping. So this backtesting session isn't going to be on the charts. Um, it's going to be in FX replay in the journals. Because of the last backtesting session on day 10, I didn't like how um, everything was going. I feel like I was a little bit all over the place. Everything wasn't as structured as I would like it to be. So uh, after sitting back, you guys probably don't even care, but I haven't been posting as much or as consistent because I feel like I was just going and gunning for it without a like set up plan. So this session, I'm gonna be pretty much refining my day trading model and my day trading strategy to make it as optimal as it can be for me. So I'm just gonna dive into the other back testing sessions that I've done here because I've done a few. I have a good amount of data set up here in FX Replay that I can go back and lean on. So I'll just go in from YouTube series down. I'll try to keep this as concise as possible. Um, but yeah, so I'm going to be taking note of the time that I'm entering these trades, how structure looks on these trades, the discount and premium arrays that I'm trading off of. Excuse me, the entry protocol. Obviously, I kind of have an idea on that, but I'll write it down again. Where does the entry protocol likely form? Am I taking out liquidity and then pushing lower, or am I reacting at like an order block or a breaker or a fair value gap? Things like that. What time frames am I using? What's the ideal risk to reward in these sessions as well? So I'm just gonna dive in head first. So starting off with the YouTube series, just to give myself a nice little check here. So the analytics here right now down about 2%. We've been trading Monday, Tuesday, Wednesday, and Thursday. So looking at Monday, Monday is it's okay. It's around break even for Monday. We have a 60% win rate. Oh, as well as we're gonna keep in mind what days of the weeks are the best for me. So Mondays. So I'm gonna write down here. I have a notebook here. Hold on, let me see if you guys can see that. All right, cool. So I have a notebook here, pretty much just taking notes on it. This is my trading notebook. It's almost done. Probably have about I'd say 20, 30 ish pages left. But yeah, so I'll write down the days and the win rates on those days: Tuesday, Wednesday, Thursday, and Friday. So I'm going to note the win rate on these days that I have on each of these sessions, and then just go from there so that in my head, I know if I'm pinning out the weekly range, I know if there's no news on a Monday and my win rate on Mondays aren't the best, then I know I can kind of skip that day or at least take a backseat approach and observe the market and how it reacts and still build data on that day. So Monday for the YouTube session is at 60% win rate. Tuesday, Tuesday we're at a little bit profitable, so we're at about 0.32% on Tuesdays, but we're at a 38% win rate. Wednesdays, a little bit profitable as well, 0.5%. Now we're at 37.5% win rate. Thursday, 0. So that's good to know. Friday, we're about a 20%. So if you guys all went to math, what we can do is we can add all of these percentages up and then divide it by 5 to get our average. Um, so I actually do that right now. I don't have a calculator in front of me, but I'll pull it up right here. Calculator. So here we have 60 plus 38 plus 37.5 plus 0, obviously is nothing, plus 20. Now I'm not going to be doing this for all of them, but this is just an idea as to what I would do for 5 days a week. So average win rate for the YouTube model is about 30%. We're at a 30% win rate for the YouTube model. Good to know because then I can adjust my risk reward in that range. So if I know I'm going to lose 70% of my trades, I have to allow my risk reward to meet a certain criteria and meet a certain risk reward so that I'm able to, be profitable at the end of the day. Um, so yeah, this was the YouTube model. I don't have any trades journaled here. So there's that. Um, we're at a 1 to 1.5 risk reward, which is obviously not working because we're down on the account. Um, but yeah, let's just keep this moving. Go over into the dashboard. I think on my current outlook, do I have a journal here? I don't. Okay, so we'll do the same thing here. Just pick up the analytics. This is YouTube. For Outlook, this account is up about 3.25%. And here, I only traded Monday, Wednesday, Thursday, and Friday. So, and it's not that many trades either. It's 1, 2, 3, 4, 5, 6, 7, 8 trades, but it's still data to be collected. So, 50% here on Monday, 100% on Wednesday, Thursday, it's about 50%, and then Friday is 50%. So, given the fact that there's not a ton of trades on this account, numbers are a little bit skewed. But looking at the risk to reward of all of them, we're at a 1.7. So here, risk to reward kind of creeped up to 1.7. So then I'll go down to the 150K Top Step account. Do I have a journal here? I have one. Okay, so here, let's see what essentially played out. So this was a missed entry. Always note where liquidity is in the market and what liquidity has been taken. So that's a great note from myself. So we have trendline liquidity here. This yellowish box can be looked at as like the overnight session of indices. So like from 6 p.m. to 6 a.m. for me at least, I see that there's really no action. Yes, London can have its moves and whatnot, but the market doesn't open until 9:30. So with that in mind, we're going to most likely build liquidity in between 6 p.m. and 6 a.m. And then run either side and then trade to the opposite end if we're bullish or bearish or whatnot. But here we had, I would assume this be a hourly fair value gap, and then we had buy side liquidity. Like look past the indicators, there's BSL right there. So price shoots up around 9:30, fully filling in the fair value gap and sweeping liquidity here. So we have a mitigation block here. You can look at it as we swept liquidity, traded lower. I believe this is the 5-minute time frame. Okay, 5-minute time frame for entries. We form a high, form a higher low, and a higher high, then a lower low with a fair value gap. That should have been the institutional order flow entry drill to take price lower to sweep liquidity. So because this doesn't have any like after effects, then I'll just not keep that. I'll go ahead and look at the analytics real quick. 150K. This one looks like we took a little bit more trades here. This account we're up about 6.1%. Took about 18 trades. We traded every day of the week. So let's look at Monday. Monday's 100%. We only took one trade. Tuesday, about 40%. Wednesday, about 60. Thursday, 75. And Friday, about 50. So I'm not going to continue looking at the win rate simply because I'm going to keep in mind that it can be skewed because of the, time of day of week, Um, each year is different as well, and I kind of go into different sessions with different strategies. So I'll base everything off of the YouTube model. So this YouTube session is what I'll base it off of. So let me see. I'll base my win rate off of the 30% win rate. And then let me see it if I have a journal here. Okay, cool. Boom. So this is a journal here from this session was the daily 1 hour and 5 minute higher time frame draw, middle time frame point of interest, lower time frame inverse fair value gap. Something I was testing out. So let's see how it played out here. So this trade here was taken at 11:05, exited at 11:02. So a 2 minute trade. Okay, let's see what happened. So we have a sweep on liquidity here. This looks like a decent breaker block here. So immediate stop out was aggressive with this move. Shouldn't have taken a setup. Only stick to the 5 minute time frame for entry protocol. And here's the entry protocol. Stop out traders. Ideally external range liquidity. You have a run on buy side liquidity. You fully fill in an inefficiency, a fair value gap. You shift structure and you leave open a fair value gap, and then you return to the fair value gap for an entry. Stops should be where the stop losses were taken out. So that right there lets me know that my entry protocol should be seen on the 5 minute chart. Ideally, where should this entry protocol format? Ideally, I would say like a higher time frame point of interest. So we can see here, entry would have been here at the 5 minute breaker, and we get immediately stopped out. Okay, so moving over to the next one. This one was a win. This happened at 10:02. So I'm just going to make a list here of the times of certain trades. This is 11 a.m. This is 10 a.m. This was a win. Higher time frame, external range liquidity to internal range liquidity. We ran previous day high. The entry protocol formed, took entry, managed risk, great execution. So there is where our entry protocol is likely to form after a run on previous day high. So previous day high is something to note. Entry was at 10 a.m. So ran previous day high. This is on a 5 minute chart, keeping those in mind. We run buy side liquidity. This looks to be a higher time frame order block. Run buy side here. Failure to displace above fair value gaps. See immediate displacement here. We have a fair value gap right here, as well as the order block, and we can look to see lower prices. There we go. So we come up inside of that 5 minute fair value gap. It looks like we had 10 a.m. news, and we displaced lower for sell side. Okay, that's a good trade. Happened at 10 a.m. $300 something trade. Okay, next. This was a loss. This was at 10:39. 10:39. Price came close to stopping me out. Didn't feel any emotions. Was comfortable with the loss if that were to have played out. Because 12 p.m. lunch came up, I closed the position out after price closed below a down candle. Great management on cutting losers short. So this is a good idea of being able to take note on what time we're at. If we're at running in close to lunch, ideally 12 p.m. to 1 p.m. is a slow session because it's lunch, people are away. So taking the discipline to close out prior to is pretty good. So what do we have here? We have a run on sell side, right? We run sell side. We fully fill an inefficiency here. We shift structure here. We leave open a fair value gap, and we have some relative equal highs above us. Yeah, this trade ideally just pretty much consolidated a lot into 12 p.m. So it was good on me to close out once we ran and closed below this down candle here, because this should have been an order block to push higher. We actually should have got stopped out here because my stop loss shouldn't be there, right? According to my other little note, my stop loss should be where the traders got stopped out. So it really should be underneath this. And it ultimately continues down to get stopped out fully. So we'll put a hard stop on trading at 12. So we're only trading that like 9:30 to 12. So I'll just put here 9:30 to 12 p.m. I'll put here at time 9:30 to 12 p.m. All right, moving down. Here, this trade formed at 10 a.m. Nice. 10:18. This was a win. And this was a beautiful setup, I said. So beautiful setup, higher time frame. I looked to see buy side liquidity, anticipated price to trade bullish after running sell side. Entry protocol formed, the run on sell side liquidity, fulfill on a SIBI, shift in structure, return to the fair value gap, enter and trade up higher. So took logical stop loss approach at 45 points. Exactly. So this is it, right? If I know that if I know that we run sell side liquidity and we push up higher, my stop loss should be at the area that got ran out, because I know that it's the most logical area. Price isn't likely to trade down to this area that it just swept out. So my stop loss should be at that area, and it should be pretty I should be pretty confident to hold that. And there we go. This is a beautiful setup. I would agree. And we have this trend line of liquidity here as well. I know I like to note trend line liquidity. So we have a trend line here. 1, 2, 3. We push higher, displacing through this inverse fair value gap. And it can be looked at as an inverse fair value gap as well. We have this 5-minute fair value gap. And again, another trade on the 5-minute. So the lowest time frame I'll go is the 5-minute for my entries. We run out sell side liquidity here. Look at the times of where these sell side liquidity pools are. This is like around 3 a.m. This is probably previous day. So we're running out some previous session liquidities before moving higher and the intended higher time frame direction. So higher time frame draw. Yeah, higher time frame draw, and I want to see like a session liquidity taken out. So take out previous session liquidity. Yeah, this was a good trade here. All right, next. So we looks like we go into a string of losses here. So let's see what we do. Understand internal range to external range liquidity, and the opposite, vice versa. We took out external range liquidity on a higher time frame, anticipate the trade to internal. Okay. So if I was looking for a buy, it probably was looking for a sell. Um, the protocol is here. We run out sell side. We trade into an hourly fair value gap. We fully fill in an inefficiency. We leave open a fair value gap, and we shift structure so we can ideally push higher for some relative equal highs. We do take out, looks like we take out some London lows here, or early New York session. But this might be a higher time frame fair value gap that gets supported. Oh, looks like I didn't look at the next, what happened after that. But ended up being a loss. This trade was taken at 10 a.m. So I'll keep that in mind. The trade was executed on a 5-minute. My entry protocol remains the same. I mean, it's the easiest for me to look. It's about 4 to 5 steps. Oops, went too fast there. Here we go. Solid trade idea. Stopped out, then headed in my intended target. Uh, Weekly has buy side liquidity, lower time frame support the bullish idea. 15-minute sweeps liquidity, trades into the hourly fair value gap and supports price. 5 minute, we get my entry protocol, run sell side, fill in a SIBI, market structure shift, return to that fair value gap. Entry at the order block, 25 points. Lesson should have the lesson here should have framed premium and discount and entered in the inverse fair value gap. Okay, so let's see here. So my weekly has buy side liquidity. I have my higher time frame draw. My lower time frame supports the bullish idea, ideally meaning we're respecting bullish PDAs. 15-minute sweeps liquidity. So I'm guessing that this is the sweep here, and then trades into the hourly fair value gap and supports price higher. So we have a sweep underneath this low and some lows back here, support the hourly fair value gap, shift structure here. Yeah, we could enter in at the order block and push higher, but let's see what happened. I see. I don't know what I was referring to when I said that the entry should have been at the inverse fair value gap. Um, oh, I see. So here is like at the high, and the inverse fair value gap is right here. Yeah, and there is a tiny fair value gap here as well. So that's what I should have take the trade on, put my stops around the rejection block to take out the relative equal highs. That would have played out nicely. That's what should have happened. So for this one, again, like I said, the lesson would be to enter at the fair value gap. Entry protocol makes a lot of sense. The context is there. We have a higher time frame draw, which is the buy side liquidity. Lower time frame matches the support of that draw, and excuse me, entry protocol made sense. Everything made sense. It just looks like here the stop loss should have been adjusted to some logical levels. So I'll keep that in mind because that's the second time it showed up where my stop loss hasn't been in logical levels. And I can agree that in the YouTube sessions that my stop loss isn't in the most logical areas. So stop loss needs to be in logical area, ideally underneath where a sweep of liquidity was just had. So let's move over to the next one. Here, process followed, accepting that there is randomness in price, wanted to see higher prices, closed price once it hit an invalidation point. So this is a 15-minute chart. Looks like we run some London lows back here, run out London, we support, see how price isn't closing below this gap here, and we push price higher. So most likely on a 5-minute, looks like the entry protocol where we run liquidity here, push price higher, shift structure, have a fair value gap we filled here, leave a fair value gap open here to push higher. But let's see what happened. Price just ended up fully reversing after running out this high here. This was a 5-minute. Okay, yeah, so this is the 5-minute. So this is just a zoomed in version of the 15-minute. Running out sell side here. No fair value gaps here to get fully filled in. So we shift structure here, return to the inverse, or at least the fair value gap that was supporting price, and had the failure to push up. When did this trade happen? This trade was at 10:18. A lot of trades are happening around that 10 o'clock hour. I do remember a comment saying that the 10 a.m. expansion is to be noted. So here we have another loss. Had a feeling we were too high to look for buys in that range. Stop loss hit immediately. Don't buy in a premium even if price is shooting higher. So I'll keep that in mind, not buying in a premium. But yeah, 5-minute sweep liquidity here, shift structure, fair value gap made sense, but we are pretty high in price. And if I remember correctly, buy side liquidity is up here, but we've been on a run, and then it ultimately just completely stops me out. Yeah, so that happened at 9:50. Maybe if I waited for that 10 o'clock hour, price would have showed different, but let's see. This trade is at 10:27. This was a longer trade, yeah. One of the longer trades, a 5-hour trade, submit to time. Reacted off a daily order block. Wanted to see internal range liquidity to external range liquidity from a 1 hour fair value gap to buy side liquidity. Waited to see the change in stated delivery inside of the 1 hour fair value gap and the 15-minute order block. Once the change in stated delivery was seen on the 5-minute, I entered right on the order block, endured a little bit of drawdown, but gave myself parameters to use to stay in the trade. Looked at it from a, if we close below this level, I'll close and hold or hold. Managed the trade, managed the trade really well, even through the drawdown. The lesson here is to get comfortable trusting the process, not doubting it, and accepting the risk of the trade. All right, so let's look here. This looks like a higher time frame setup because we have the run on liquidity here during London. So that's pretty much the third time where we run out London's low. So London's low target, actually London's low potential NY reversal point. That keeps me in check to know, like, if we run out London's low and if we're bullish on the higher time frame to draw to the buy side liquidity and we run out London's low, it's likely to reverse at that level because it's London session's low. It's not just any low, it's London's low. So here we have the run on these relative equal lows here, on this down move here. We fully fill in this 5-minute fair value gap. This 5-minute SIBI gets filled in. We leave open a 5-minute BISI after shifting structure here. All of these up candles before the down move that takes out the sell side, this all can be looked at as a breaker. So we can draw that out in time. Stop loss again goes below the area that got stopped out. Then price continues pushing. Yeah, so this would have been a pretty long trade. And I see why I said, like, look at it from a, if we close below X level, I will close / hold. I think that's a great trade management idea, just to keep the parameters correct and use in your mind invalidation points and zones. So that's good. So this was a good trade. This one down here is a loss. This happened at 10:52. So around that 11 o'clock hour, stopped out, figured taking a long at a 5-minute inverse fair value gap after respecting the 15-minute fair value gap would be what pushed price higher. Also, it is NFP week. Yeah, so again, that yellow box from before that we've all been seeing that I note is from 6 p.m. to 6 a.m. This helps me keep in mind the, the non-trading zone that pretty much happens every trading day from 6 p.m. to 6 a.m. So we have buy side above it and sell side below it. So here we see here London's low is intact and it continues pushing higher. 9 a.m. we have the 15-minute fair value gap here that gets supported. So as I'm looking in, yeah, this is an inverse fair value gap here. So it looks like we run sell side. Maybe on a 1 minute, this would have been a little bit more clear, where we run sell side, form a low, shift structure higher, fully fill in a fair value gap, and leave open a fair value gap and push higher, maybe. But look at where we're at. Where are we? We just ran, looks like previous day high. And this might have been a higher time frame fair value gap. Yeah, 4-hour fair value gap. All right, so this is a great example of keeping in mind where I am in price. So I'll actually bring that back. I'll bring this box back just to keep me in check. because I did have like a type 1 and type 2 schematic that I was using. I'll show that as well shortly. So from 6 p.m. to 6 a.m. Yeah, I'll keep that in mind. Um, this was a win. This was a setup. Run the weekly high. Yeah, run liquidity here. Fully fill this inefficiency. Fair value gap left open. Shift structure here on this. Trade down. Push higher. That makes sense. Um, but yeah, let's go into another one. Let's go down here. Not the analytics, the journal. All right. Yeah, I had the 6 a.m. to 6 p.m. noted on each one. I think I'm gonna bring that back. Price traded up into TP, so I dubbed the trade. Yeah, I mean this makes sense as well. This is a 5 minute no trade. Um, yeah, so we probably ran. Yeah, so we did. We ran sell side, traded into an inefficiency, fully fill this fair value gap, leave this fair value gap open, trade back down into it around 9 a.m., push price higher um, for the previous day higher, at least the previous London session high. And then, so I would have wanted price to come down into this fair value gap and then push higher, but it just pushes higher before even coming down. So that's good. Lets me know that okay, we can't take that trade, but there could have been a trade where we take out the sell side liquidity on London on the previous London's high back here, and then we can look to trade price down. But sometimes that doesn't happen. Here, there we go. Whoops. Yeah, this was a loss. Again, buying above buy side liquidity. Even if the daily time frame is screaming higher, don't buy above a high. Look at that 5 minute change in state of delivery as a reason to get in, but it all formed in a premium. Yeah, all formed in a premium. That makes sense. Let's see what that win looks like. This was a win. Nice change in state of delivery entry. So again, we run below London's low. 15 minute, we shift structure here, push higher, come back down into a discount and a 5 minute fair value gap, which we should have entered in here. This trade is at 10:23, so it could have been a little earlier that we enter in around here. Um, Entered at the change in state of delivery, and price pushes higher nicely. Yeah, entry could have been a little earlier at the fair value gap. Um, so yeah, but this makes a lot of sense right here, where we have a run on sell side. This is the entry protocol. Run sell side, fully fill in, or excuse me, run sell side. Sibi gets fully filled by a BISI. That shifted structure. We return back to that BISI or that inverse fair value gap and rally higher for buy side. So that makes sense. Yeah, I'm gonna bring back the uh, this range here. Just give my eyes a little bit more context. I had a type 1, type 2 schematic, excuse me, that I was using. Pull it up here. Go to, where's Discord? Yeah, I had this in the vault for some time. I had a few different uh, models that I was going with. Essentially, the 6 p.m. to 6 a.m. is like overnight session. So it just lets me know when not to trade and what liquidity I should be trading. So if I'm bullish, type 1 essentially is running out sell side liquidity and then rallying to buy side. Type 2 would be like a failure swing of the overnight session range. So if I'm bullish, and I can put this all on the chart maybe in the next session. Here we go right here. So this is a pretty much great example of a type 1 schematic where we have 6 p.m., 6 a.m. This is a range here. We run out previous day high and we're bearish. We run out previous day high here. We trade lower. We create an order block, entry at the order block, and trade down. So this is a 15-minute. So on a 5-minute, we would have gotten our entry protocol. Run out buy side, fully fill in an inefficiency, shift structure, leave open a fair value gap, entry at the fair value gap, stops above the high that got swept, and then trade lower for relative equal lows on sell side. So this is a beautiful example of a type 1 schematic. Let me see if I can find a type 2. This is a type 1 as well, where we run out some lows here, shift structure higher, fully fill in inefficiency here, leave open a BISI, entry at the fair value gap, and push higher. Oh yeah, I'm going to get back on this. What the fuck? I've been on some bullshit. Yeah, type 1 again. Running out buy side liquidity here, ran buy side, shifted structure here, no pullback into the inefficiencies, but this is a 15-minute chart. On a 5-minute, there could very well be a trade in here somewhere, especially with it being pre 12 p.m. Okay, this is a type 2 schematic. Type 2 because it fails to run above the overnight high. So if we're bearish and we print the 6 p.m. to 6 a.m. range, we displace here lower, and we come back inside the range. So you can think of it like equilibrium of the range, and then continue lower. Where's another example of like a type 1? This is a type 1 running out buy side, shifting structure here, fulfill here. Oh yeah, this is all coming back. This is a great example of a type 1. On a 5-minute. Here's the range. This is 3 a.m. to 9 a.m., but it's all the same. This is the range. We run out the high. We shift structure here, fully fill in a fair value gap, have a breaker here. 9 a.m. to 10:30 should be the ideal area for entry. The higher the low of AM session is likely to form in that window from 9 a.m. to 10:30. We ran out buy side liquidity. Oh yeah, type 1. Here's type 2, where we come back inside the range around the 50%, and then we push higher. This is type 1. Oh yeah, I'm getting back on type 1 and type 2. This is all making sense. And it gives me a lot of context and structure as well. I don't know why I leaned away from it. This is amazing. This is type 2. 15-minute fair value gap. Run above buy side here on a lower time frame. If we zoom into a 5-minute, we can see some structure here, likely formed. Entry here, running out some lows, maybe. But for the PM session, I mean, this probably doesn't even happen at PM. This probably happens like at the end of lunch. But we have the fair value gap here. So we run out buy side liquidity, fully fill in a fair value gap, fully fill in a BISI, leave open a SIBI, shift structure here. We retrace back up into a premium, tap the mean threshold of the inverse fair value gap, and trade short. That's a beautiful trade. With the higher time frame being bearish, right? The daily was bearish, so the 15-minute looked like this. My daily was bearish, so my 15-minute looked like this. Type 2, run above. This is 6 a.m., around 6 a.m.'s high. Run the 6 a.m. highs. Displace lower. Shifting structure here. Breaker. Entry during PM. Displacement. Type 1. We're bearish higher time frame. 15-minute order block. Resist price here. We have this low to this high, so This is a breaker right here because this low pushed higher, sweeping out some highs into the fair value gap, into the order block. Those resist price lower, showing displacement and speed during, looks like it could have been early PM session. We retrace all the way up into a premium into this range here and the breaker and displace lower. I got to get back on this, man. What the figgity? Fuck, man. Oh, man. This is beautiful. Type 2. Run out buy side. Shift structure. Fair value gap entry. Lower. Yeah. 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 This gives me all the context I need. Yeah. 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 This lets me know what I need. Yeah. 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 And look, let me show you guys some funny shit, right? If you guys are even here, I've been doing this for some time. Like this exact setup I've been doing since 2022. Late 2022. It's been 2 years. I've been fucking dilly-dallying, playing around. It's been 2 years that I've been screenshotting the same exact setup, and I've just been playing around, man. Terrible. Terrible, terrible, terrible. I have some open, high, low, close theory in here. This is back in June of last year. This is June of last year as well. This is August of last year. So really 2022 into 2023 and now 2024. But yeah, I'm going to end it here. I'm going to adjust everything to this model. Essentially just bringing back type 1 and type 2 schematics. If I'm bearish, I want to see either a type 1 running out external range liquidity, trading back into the range or higher, or type 2 where we're failing. So, yo, why is this shit all coming to me right now? Pause. ICT daily protraction. Right here. Intraday market profiles.
Greater than 40.
Shopify has impacted our business heavily. It gives us a platform.
There's been a whole lot more.
Crippling hot sauce is crazy. Yo, my son is in the wheelchair. Crippling hot sauce. Oh, man. God bless me. But this is like a type 1 schematic, right? We have the range here. This is 2 p.m., but we're looking at it from like 6 p.m. So we have the range. We push higher during London or New York. Running out buy side, trading lower for sell side. Let me see if he shows that example. Right here.
Around the money close time.
Yep. This is pretty much like a type 1, given that it's happening at the correct times. But yeah. And then type 2 is like this. Oh, yeah. What have I been doing? Delayed protraction. So type 1 is a normal protraction, and type 2 is a delayed protraction. All right, bet. I'm going to be diving into this very, very deep. Pause. What the fuck? Yeah, that's about it for me. I'm out of here. I'm gonna be diving in, refining this model for the YouTube series, and then coming back tomorrow and locking it in, locking it up. So until next time, until tomorrow, I'll be back with the type 1 and type 2 schematic. Oh man, I can't believe I've been fucking, I had this shit in my fucking back pocket and haven't been using it. Until next time, I'm out.